If you're waiting for the bottom of the Toronto real estate market, I need you to hear this first. The bottom doesn't announce itself. It doesn't come with a headline. It doesn't feel comfortable. And most people only realize it passed after prices are already moving again. And that's why the real risk in 2026 isn't buying too early. It's buying the wrong thing when you finally decide to move. Because I'm seeing buyers make confident decisions in the wrong segments for the wrong reasons, based on the wrong idea of the bottom. And in this video, I'm going to walk you through what the Toronto market actually looks like right now as of February 2026, and how first-time buyers and move-up buyers should be thinking about risk, opportunity, and timing. Not hype, not predictions meant to sound bold, but homeowner level thinking. And if you stay till the end, I'm going to show you how I personally separate good opportunities from future regret in this market. Because 2026 will reward buyers who are selective, not rushed and not frozen. So let's get into it. If you're a first time buyer trying to figure out when to step in, or a move up buyer wondering whether this is finally your window, this video is for you. And I want to say something clearly at the start. Most buyers right now aren't confused about prices. They're confused about risk. They're asking, what if prices drop after I buy? What if this isn't the bottom? What if I wait and miss my chance? Those are all rational questions. But they're also the questions that keep people stuck. So today, I'm going to reframe the conversation, not calling around the bottom, but around controlling downside while positioning for upside. This video follows a simple structure. First, I'll explain where the Toronto market is actually right now with real data. Then we'll talk about what's quietly changing beneath the surface. And finally, we'll get very specific about what types of properties make sense and which ones carry the most risks. Because the biggest mistake in 2026 is not buying, it's buying the wrong thing. So let me share my screen with you. Let's look at the stats as of right now in Toronto, including the GTA. So you can see right here, when we're looking at sales activity for January, the data shows that detached home activity dropped about 13% year over year, 19% for semi-detached homes, which is actually a little bit surprise for me because that was a very busy segment last year. 23% for townhouses and 26% in sales for condos. That's a pretty big number. So they lost about a quarter of the buyers out there. And when you're looking at pricing, here's the thing that matters a lot to people, obviously, because this is where you purchase and sell. So when you look at detached homes, year over year, we dropped about 7%. That's a pretty hefty number, considering that most detached homes are close to 2 mil or more. Semi-detached homes have dropped up almost 10%. Same thing with townhouses and condos. So it seems like there has been a 10% drop on pretty much majority of the segment right now, other than detached homes. So these are noticeable numbers. And especially when we're coming in from a slow December. December was actually slower than what it was a year ago as well. So a couple of interesting things are happening with the market. It's one of the slowest starts we had in years. So let's take a look at another piece of information. So when we're looking at a year over year summary, let's look at sales as a whole. That's down by 20%. Again, very noticeable. It's a very noticeable number in terms of decrease. New listings, which is interesting enough, is down as well though. In the last little while, last few months, I actually saw that majority of the months out there were at least a minimum of 10% more listings. Maybe a majority of them have been listed already, or they're waiting for the spring market. And as of right now, too, one thing that to pay attention to, have been looking at what has left on the market. There's about 8% more active listings sitting on the market. And average prices as a whole is down about 6%. And you can see average age of market has increased as well. As of 2026, I'm going to start keeping track of months of inventory because this tells us the speed of the market. Interesting enough, detached homes is sitting in a strong buyer's market, 6 months of inventory. Semi-detached home sitting in a seller's market at 3 months of inventory. Row houses, townhouses sitting about 4, which is a balanced market. Condos sitting about 8. Very, very strong buyer's market. And the condo townhouses sitting about 7 months of inventory. So there's a lot of buy opportunities in the detached and the condo and condo townhouse market, which I'm seeing firsthand. There's a lot of condos and condo townhouses that have been sitting. some great properties too that I'm quite surprised that buyers have not jumped on there yet. Because one thing that I've been noticing is that because of the number of supplies, the high inventory, it's very hard for some properties to shine through, to cut through the noise. And looking at average prices as a whole for townhouses, you can see there's been a downward trend for the last little while. Are we near bottom? Not sure in terms of pricing, because usually what happens before you hit bottom is that you flatline a little bit. It shows that there's still a bit of decrease happening, but it's been going up and down. It's been trending up and down, just shy of 700,000 for the last little while, and it's the lowest prices have been in the last couple of years for sure. Same thing when you look at condos, like these are apartments. So looking at those, this is a little bit different. There's a little bit more. It sort of flatlined here. It bumped up a little bit last year in the fall, and it started dropping again. And it's the lowest it's been in the last few years for sure. But when you're looking at detached homes, totally a little bit different, as you can see, because this has been trending down, 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 but they're pretty stable in my opinion right now. It's standing around a little bit over the $1.5 million mark. See, it just fluctuates up and down from there. So that might be maybe the bottom for detached homes. For semi-detached properties, when you're looking at trends over here, it's similar-ish. As you can see, it's been going up and down for the last in the last 6 months. Hasn't been, and it's trending a little bit upwards right now. So only time will tell what's going to happen with these type of properties. And the last thing, when you're looking at row houses, as well, it's been trending for the last 6 months between the 1 to 1.1 mark. It's been going up and down. You see over there. So sometimes that might indicate bottom. But again, we don't know until we look backwards in time. Here's the honest answer about are we at bottom. Markets don't bottom in a straight line. They flatten, they stall, and they frustrate. That's exactly where Toronto feels like right now. Prices aren't free falling anymore. That's pretty much done, it looks like. But they're not ripping higher either. They're uneven. It's like it goes up, goes down, goes up and down. So some segments might feel stable, some feel weak, but that could be a week by week thing as well, because that is how the market is right now. It's very confusing. And here's what most first time buyers I speak to are saying. They're not saying, I want a deal. They're saying, I don't want to make a mistake. And move up buyers aren't saying, I want to upgrade. They're saying, I don't want to get trapped, because they probably feel trapped right now. There's a lot of people that feel like they're trapped in condos and condo townhouses and they can't move up. Now, before we go further, let me tell you what I'm not going to do in this video. I'm not going to give you the date of the bottom. That's impossible. I'm not going to tell you prices are only going to go up, because that's not the case right now. I'm not going to pretend risk doesn't exist. Instead, I want you to think like a homeowner, not a speculator, because homeowners don't need perfect timing. They need survivable timing. So let me pause you right here, because this matters. You're still thinking, I just need to buy the lowest price possible. You're already setting yourself up for regret. I'm going to tell you that right now. The goal is not the lowest price, even though that would be fantastic. The goal is the lowest stress path forward. And those are not the same thing. So what's quietly happening in Toronto's real estate market right now? Buyers are splitting into two groups. Group one is frozen. They're waiting for certainty. They're waiting for confirmation. They're waiting for a headline to tell them it's safe. Usually those people will get caught up behind and they'll be part of the craziness when everyone else comes back. Group two, they're moving, but they're very cautious. They're not buying everything. They're not chasing. They're filtering aggressively. And the market's starting to reward that second group, not with instant appreciation, but with control. Because you could put offers in with conditions. You could negotiate and you can control your selection. But we need to break this down by property type, because it's very different depending on what segment we're looking at. So let's talk about condos first. Condos has been an emotional punching bag of Toronto real estate for many years. And here's a nuance that most people miss. This is no longer the condo market. It's a multiple condo market. Older, well-run buildings with real estate very differently than newer buildings with artificially low fees. Buildings with high investor concentration behave differently than owner-heavy buildings. We know that because the layouts are different. The feel of the building is different. So when buyers say, I'm scared condos could still drop, what they're really meaning is, I don't want to buy the wrong condo. And that fear is valid. I'm with it. Because the risk in a condo is no longer price alone. It's fee management, future cost uncertainty. But here's the key mindset shift for 2026. Condos are no longer about upside first. They're about cost stability first. If you're a first-time buyer, the wrong condo can lock you into rising monthly costs even if prices stay flat. If you're a move-up buyer, the wrong condo becomes hard to sell when you want flexibility. So what works? Well-managed buildings that have great history, layouts that real people want to live in, not just rent. I'm talking about very usable layout. You know where the TV goes, the couches, no weird corners. So what doesn't work? Newer buildings with marketing fees. I'm talking about like the marketing maintenance fees are very low. And buildings where no one seems to be happy. You could probably see this in when you go visit them. So if you're a Toronto property owner and you find this information helpful, subscribe for more videos just like this. I launch about 2 to 3 videos a week that covers just not just the market, but tips and tricks that I'm using on the ground right now successfully for my buyers and sellers. So let's talk about freehold houses. It's houses that have no maintenance fees, because this is where a lot of buyers think maybe I should skip the condos altogether. And sometimes they're right, but not always, because Toronto houses are just not one market. East and west of the city behave completely different buyer pools, different supply pressures, different renovation realities, because this is how the makeup of the type of homes are in those areas. What I'm seeing right now is well-located, livable houses that are a lot of times move-in ready and functional are holding value. Why? Because move-up buyers are selective, not absent. They're waiting for the right house, not any house. The mistake I see is buyers stretching too far for something they don't actually need just to avoid fear. So buying a house doesn't automatically remove risk. It's often changing the risk. There's higher carrying costs because the houses usually cost more than condos. There's renovation surprises. So the right house purchase in 2026 is one that you can live with, not one that impresses people. So let's come back to the question that brought us here. Is this the bottom? Here's the most honest answer I can give you. The bottom is only visible in hindsight, but good decisions are visible immediately. A good decision feels survivable even if prices dip. A good decision doesn't rely on appreciation to feel okay. A good decision gives you options. In 2026, the buyers who win are not the ones who perfectly time the market. The ones who buy assets they can live with financially and emotionally, even if the market stays flat longer than expected. So here's the framework I want you to use instead of asking, will prices go up after I buy or go down? Ask this: if prices don't move for 3 to 5 years, am I still okay with this decision? If the answer is yes, you're thinking correctly. If the answer is no, that's not timing risk, that's asset risk. And remember, especially if you're moving into a house, most likely you're going to be in that house for over a decade minimum. Think about this: the buyers who struggle later won't be the ones who bought too early. They're the ones who bought the wrong thing out of fear. So make decisions you can live with. That's how to win in this market. Thanks again for watching. See you soon.